Hello and welcome from Trend Signal with a review of the data and events the week starting the 13th of January. Last week, markets a bit mixed really. The FTSE was unchanged on the week. S&P was up about 11 or so points, but the Dow was actually a little bit weaker, down about 32. Undoubtedly the big move really, apart from the dollar reversing its moves from earlier on in the week last week, was in gold. That was up $10, but bond markets, they rallied sharply with the Bund up 125 points and the gilt up almost 160 points. So some sharp moves higher in the bond markets. Just a quick review. The data on the services sector last week in the UK really suggests the UK economy is going for a bit of a flat period as both sets of data missed consensus. Sterling bounced around unchanged versus the dollar, but it did give up some gains versus the euro. As I said, the gilts were pretty strong as inflationary expectations and rate expectations were dampened down somewhat. Interest rate decisions last week were pretty much as expected, although the ECB press conference did cause a few fireworks as Draghi suggested that the Executive Council were concerned about deflation and reiterated that interest rates would remain low for a considerable period, which is quite unlike the hawkish ECB. But the main event really was non-farm payroll, which was surprising on two counts, really. The first surprise was that non-farm employment only rose a fairly weak, paltry 74,000. The actual unemployment rate, though, fell from 7% to 6.7%, which is the headline grabber, which seems to paint a different picture. At least that's what it may look like. The cause, apart from the additional 74,000 jobs created, is the 347,000 people leaving the workforce for various reasons, retirement, no longer looking for work. The second surprise is the market reaction. The initial reaction was, as you'd expect, with the dollar falling against all majors and bonds rallying, but equities fell initially, which is what you'd expect, quite sharply in fact, but in the end the Dow shed just 8 points and even the S&P's actually ended up rallying 4.25 points on the day. So all a bit confusing, but nevertheless a lot of commentators are saying that the numbers are too erratic to have an impact. The weather played a part, has distorted the numbers, and they're just saying it's a payback for November's good numbers. So perhaps looking at the average over the previous 2 months, which is 160k, that's just marginally below the average for the whole of 2013. So they've got an answer for everything, haven't they? Let's have a look at the data coming out this week. It's a quieter week than last week. We had a lot of data last week and events that we had to plan for, but this week a lot quieter really. The first key data is tomorrow. We got the inflation data in the UK, CPI expected at 2.1. There seems to be general concern actually from central banks that inflation now is below target. Even in the UK, where we've missed it for years, we're close to hitting our 2% target at 2%. So inflation is not an issue. With that in mind. Next important bit of data on Tuesday, we got retail sales out in the States, plus 0.4%. Weather could play a part. Unfortunately, that's going to be the story with a lot of data in January, unfortunately. Then on Wednesday, we have the other end of the inflation data, the input prices for the producer price index. Surprisingly 0.5%, but the core rate at 0.1% is more in line with what we're looking for. We do have a manufacturing data out this week with the Philly Fed later on in the week, but the first one is the Empire State Manufacturing Index, which is looking to have a slightly stronger number for December at 3.2. We then jump to Thursday, where we have the US inflation data, very benign, same as the previous month, plus 0.1%, so below the Fed's targeted rate. And that's what's expected then. Unemployment claims, well, following the data on Friday last week, it tends not to attract too much attention. This we'll be looking for what revisions are going to happen in a month's time on the non-farm payroll, but 327,000 there. And then we have that second manufacturing index from the Philadelphia region, expecting another rise there as well, 8.8. So some positive news on the manufacturing there. And then on Friday, we have UK retail sales at 9:30. questionable as to whether it will be plus 0.5%. The retailers didn't have a happy time before Christmas, but that is something we can look out for at 9:30 on Friday. And the final number for the week is the leading indicator of the preliminary consumer sentiment number for the University of Michigan. That is a key number. It's a good leading indicator. 83.4, so a rising consumer sentiment, which is key to sustaining this recovery. As I say, I think the non-farm payroll data Friday seemed at odds with a lot of the other manufacturing and employment data that we've seen released so far. So that's why the markets think it's a number that's too erratic and not to be believed. So that's the end for now. We will reconvene on Thursday at 8 o'clock. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.